One is the delisting of Chinese companies listed in the U.S., and that is an issue that's been a long-standing dispute between the U.S. and China over oversight of audits of these companies. And Chinese companies are technically out of compliance, and the U.S. could wake up tomorrow and say, you can't be listed in the United States because you don't meet the requirements. Mm-hmm. The U.S. has not done that because of the collateral impact that would have on a lot of investors. But it's a very real risk that investors have kind of ignored for a long time. The second issue is this idea that there would be some kind of restriction on portfolio investment in China. That's a broader and also more vague issue. But the problem that raises is that a lot of Chinese stocks and bonds are now are part of a number of international indices that investors use to benchmark to. Mm-hmm. So if they're not able to allocate to that puts them at risk. They're not a large part of those benchmarks, but they are a part of those benchmarks, and so that's the immediate question that this issue would raise in any investor's mind. Right,
although, Nick, it's interesting because we're talking about a relatively small piece of the overall U.S. dollar flows into China. I mean, a lot of it comes from U.S. companies. Even for the Chinese-listed companies, there's 156 of them right now on U.S. exchanges with about $1.2 trillion worth of market cap. Now, that's not nothing, but there's other ways if the U.S. really wanted to that they could say to corporate America, nope, we're not going to let your investment dollars flow to China either. So just beginning with this investment piece, how big a step would something like this be as far as you're concerned?
I think it would be a pretty big concern because as we've gone to obviously a global world, like the last guest said, it's going to put a tremendous strain on a lot of the indices that we see on a global basis.
Yeah, the MSCI,
exactly.
Other averages.
ACWX and so forth and so on.
Sure, that include Chinese stocks. Joe, what is how do you think through the economic impact as we discuss what possibilities may now be on the table?
Those looking for a short-term trade deal obviously will be disappointed with this news. I've thought all along that there won't be a deal of any sort until the Fed has moved rates significantly down, and they're still, on my mind, going to reduce rates, and therefore any type of deal won't occur until next spring, let's say, in which case what we're seeing now is the pressure points that you allude to and making it perhaps more willing for the Chinese eventually to come to table. But there won't be a deal until the Fed moves more and rates are lower.
Well, because, yeah, you think they're going to pursue that first and then maybe do this next year.
Sure, right. If you get a deal now, then the Fed may not move because the Fed has been pretty clear that they think the trade deal is a big risk to the economy and therefore will continue to cut if that remains the case. So a deal would obviate the need for them to cut further.
So you think the president wants his cuts first and then he'll strike a deal. All right. Patrick, let me bring you back in here. How do you expect the Chinese might respond to this? It's hard to deny that their companies have lack the oversight that you're talking about when it comes to their presence in the U.S. market. And we're seeing, a lot of the names like Alibaba sell off pretty hard here.
Yeah, I mean, obviously it puts pressure on them because it would, harm Chinese companies, but it also comes with a lot of potential collateral damage to U.S. investors if it's done in a very abrupt way. So that's all along. There's sort of been an attempt to come to terms between the U.S. and China on this without some sort of really destabilizing event like mass delisting.
All right. And Nick, this news obviously has hijacked our broader discussion about the markets here. But, as we just look to close out the quarter with a little bit of this uncertainty now as well, is there anything you do to change what you're advising clients?
Yes, I think it's important to have a real defensive posture right now. As long as the market's climbing, a wall of worry will be okay. But when it becomes a wall of fear, which this is turning into rapidly, then it's a different situation and all bets are off, as we've seen how rapidly the news changes the overall environment. So I think making sure your allocations are in line, you're not out of balance as far as how you're positioned so that you're not over the tips of your skis, so to speak.
All right.